Hey, hello. My name's Eric Wilkinson and I'm with Pro Trader Strategies. Let me go over a couple of things really quick before we get into this. I'm going to be talking about one of my favorite trading metrics, and that is Stoudemire. Yeah, he was probably one of the most popular people on the floor of the Chicago Board of Trade, where I traded for over 20 years. And off the floor, probably nobody knows him. But you probably are a little bit familiar with some of his stuff, especially if you watch my daily market commentaries or my webinars. You know it is one of the things that I use the most. But let me get a couple of things real quick out of the way. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. I started trading in college with a psychology degree. And then once I realized I wanted to start trading, I switched it over to finance. Ran up to Chicago after graduating with that degree and started working on the floor. But in that time, I've always said that my psychology degree probably helped me out more in trading than even my finance degree. And that's why it comes into my trading strategy is around the Stoudemire. And I'll show you how to set that up. Any opinions, news, research, and analysis is considered to be general commentary. And remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, so let's get on with it. We're going to be talking about Stoudemire theory. Peter Stoudemire came out with this in the late 70s, maybe early 80s. And what this was based on us trading on the floor and how the markets were trading around certain prices. Well, what he did is he came up with a system where every time a price traded in one of these time brackets, these are all 15-minute time brackets. It starts out with a dollar sign. You have your A, B, C, D, E, F. All of those were 15-minute segments. So every time, say the bonds traded at 146.11, then we would circle the D in the D time bracket. Now, all of those prices that traded in the D time bracket would be notated. Once we went to a new one, all of those, what comes after D? E, obviously. I'm trying to think too far ahead in advance. But after D, then the E's start filling out. And what it does is it builds this little bell curve. And it tells us the psychology of the market. It tells us where price is being accepted. It's free market price discovery in a visual scale, right? When something is too expensive, people aren't accepting price at those levels. Those prices have to come down. Vice versa, if the price is so cheap that nobody is willing to sell it anymore and all the buyers come in, what happens? The market goes back up. That's what Stoudemire gives us a great representation of in a chart trading pattern, okay? So some people use Fibonacci. I like to use Stoudemire. I layer sometimes Fibonacci over the top of it, but let's get on with it. Show you how to set up this Stoudemire. Well, Thinkorswim didn't want to pay Peter Stoudemire for this information, which is a very easy algorithm to come up with, right? So, but they also expanded it. They brought in volume, which is even more important to me than really time, because just because it's spent time there doesn't really mean that price is really being accepted. It just means that there is no momentum in one direction or the other. When we add the volume in on it, though, that creates a three-dimensional picture as to where traders and investors are accepting price, where they find value or where they perceive it to be a little bit overvalued, right? And it gets overvalued, we come back down. When it's undervalued, we start rising to the top. So to pull this up in Thinkorswim, it's pretty easy. We go over to the little beaker over here, and we just type in volume. And you should start to see it come up. Volume profile right here. You can double click on it or click and add the selected over to the side here, right? So once we add that, apply, okay, this is the volume added in. This is where the most amount of transactions in terms of size has taken place. And the idea is that 70% of the volume has taken place within the value area high and the value area low. That being said, this is the point of control. The point of control is where the most time and volume has been spent. or the most time, or the most volume in this case. We haven't added in the time aspect, but this is where the most volume's been transacted up until this point, and 70% of the volume between this area. Now, the way to trade this is when we get to extremes, and I'll go into that in a little bit more detail. But when we see price is not being accepted, like when we saw this big sell-off in the E-mini S&Ps, there was a lot of people really dumping positions down here. This is capitulation. And the best way to see capitulation is on the volume profile, because we can see when it gets really strung out to these really thin lines, that's where there's no more price being accepted, okay? And that's where you expect the flip of the switch in the market to turn back around. It's going to want to migrate at least to the point of control. Now, markets have a tendency to hurt the most amount of people as often as they can, right? That's one of the things we talk about as the markets. But we can see the market's really overextended to the downside. You want to take advantage of it when it's on the rebound. Now, if you have a higher risk tolerance, you could see when it starts thinning out that you know the market is probably going to turn around, okay? That is for a high risk trader. For a lower risk trader, you wait for it to get overextended, and when it recovers and comes back inside of the value area, that's where you would initiate a buy here. And then get out, depending on how many quantities you're doing, get out of a few of them at the point of control, or all of them at the point of control is really the idea. And then wait for it to go to the extreme upside, come back down to the value area, inside the value area from a rally. So now we would be shorting it to go back to the point of control, all right? I have a higher risk tolerance than most people in a situation like this. When I notice that and I can see the signals show up, that's where I'm going to initiate mine, cover some of them at the value area low, and a couple more at the point of control, and depending on my market assumption, the balance there or not. All right. If you enter coming into the value area, that is where you would place your stop. Again, here we went overextended outside the value area, settlement back inside the value area. We would expect this migration down to the point of control, okay? That's how we're going to trade this. Now, if you don't really like trading on, well, one more thing, let me add in one more thing real quick, and it's not in the gears. I want to add in the volume profile, or the other side of that, which is the time profile, the Stoudemire aspect, which they call on Thinkorswim is called the market profile. So they call it market profile, at least I believe they used to. So we got the monkey bars. That's what they call it, the monkey bars. So the market profile is the entire thing of what we used to call Stoudemire. Monkey bars is what Thinkorswim calls the Stoudemire, where it adds in the time reference. So when we look at this, remember I was talking about we use A, B's, and C's here with Stoudemire. The Thinkorswim platform adds in the monkey bars, which is in numbers. So each number is going to represent a new time bracket. So depending on if you have it on minute brackets or 15 minutes, it is going to add that in. If we could zoom in here, let me try and zoom in. You can see these are all numbers. So every number correlates to a different time frame. It would be mostly on 30-minute time frames here on the daily chart because I have it set up that way. But you can see there's different colors in here also. Those are going to represent different trading times as well. For instance, green might have been Wednesday and red might have been Tuesday. So just know I don't really go into the minutia of those different time frames. I'm looking at the bigger picture. I'm looking at the bigger bell picture where the most time and volume's been spent on this particular underlying. And we can see we've got the volume is in the red, the time is in the yellow here, and then they're also going to have their own individual value area highs and value area lows. Those are usually going to line up very closely together. But if we want to switch this in, if you're a day trader and you want to get in and out of these relatively quickly, we can easily set this up on any type of time frame. It's going to be a little bit more of a different trade, whereas I was talking about with the E-mini S&Ps on this type of chart, we're trading this coming outside of the extremes and back in. For instance, we would be shorting this now to migrate back to the point of control, and our stop would be the value area high again. So this being culminating with all of the information we're getting out with the economic data, I don't really expect the market to really rally too much or really dump off too much. I think for the rest of the year, we're going to kind of stay within this value area and build up a very large rounded off bell curve and fill in these smaller nodes, okay? And I'll talk about that, why I think that's going to happen, because we see that show up when we break this down. So I'm going to go from the chart setup that we have here, and I'm going to switch a couple of things to make it so we can go and look at it on the daily chart. So we want to go to the volume profile, and we want to go to the gears and switch a couple of things up real quick. We go to automatic, and we're going to switch that to tick size. And then we're going to go down to chart real quick, and we're going to switch that to the day session. And then we're going to go down to on expansion, because right now it is over here on expansion. We don't want that expansion anymore, so let's drop that. Okay, we're good there. Apply. Okay, this gets a little confusing. You can't really trade it off of this very easily, but you can see the market profile is around each day. Now let's go to our 30-minute chart. I like the 30 minutes the best. You may go to the 15. If you go to the ones, it's a little bit more difficult. But you can see you trade off of the previous day's value area high and low. So in this day here, yesterday's trade, we would have traded off of Wednesday's value area high and low. So when the market trades outside of yesterday's value area here, once we came back inside and pierced this previous day's value area low, that would be the place to buy and put your stop. And you can cover some at the previous day's point of control, because we haven't built out today's point of control, and then cover the rest at the other day's value area high. Similarly, today you would have tried to short outside of yesterday's value area high. There wasn't that opportunity. You might need to switch it over to the 15-minute chart if you're not getting that kind of confirmation. But that's how we trade the Stoudemire. You know the market wants to migrate back to points of control, because that's where people have been accepting price. Think about yourself. When the underlying is trading right where you bought it or shorted it, you're pretty comfortable. But if it gets to where it's a bigger loser, you're not so comfortable. A bigger loser or winner, you want to cover it. Not so comfortable. So that's the same idea as we are seeing with the market profile. It will show up on a chart. All right. That's pretty much it. I could go on and on about this. Follow me at Pro Trader Strategies. Check out some of my webinars. Watch the daily market commentaries, because that's where we go into all of this detail. We're also giving you this right here. You're going to have to punch this into your URL and to get this deal. But this is how to trade options like the Wolfman. It is a great course for beginners. And even if you're a savvy trader, you're going to be able to take stuff away from this. I don't care how long you've been trading. And one of the biggest things that gets missed is your portfolio is this bond portfolio. And if you've been watching that with these interest rates moving all around lately, you're seeing your bond portfolio being affected. And most people just disregard it, even though it's about 50% of our overall portfolio, you guys. You have to manage that. It's not just all about the stocks. Keep in mind those over there are affecting your portfolio value, and I show you how to stay diligent with that. How to measure theta decay to trade in your favor. If you guys like day trading, I've got a trade right here for you. It's trading using gamma trading options. Market profile, I go into a little bit more detail than I did here, okay? Calculating the cost of an option. All of these things are going to help you sleep at night. When you trade with my rules for options, you will be able to sleep at night. That's not being able to be presented when you're trading futures or things of that nature. But I have specific rules, and how you stay mechanical in and around all of these trades, and that there is no guesswork. When you're doing a spread, you know exactly how much collection or how much you should be paying for that spread. All right. I'm not just giving you how to build out a call spread. Everybody can do that, right? I go into details, the type of environment, where volatility should be, what your strike location should be, how much credit you should get or how much debit you should pay. All right. So follow me. Go to Pro Trader Strategies, sign up for this. I'll take care of you. Get the daily market commentaries because I go through every single trade I do, win, lose, or draw, okay? I'm not just cherry picking the winners and saying that's how this works out. No, I go through the ones where I'm talking about the losers and saying this is life and this is how we stay mechanical to make it into a winner. So check it out how we do that. Last thing I want to do is just thank you guys all for participating in this. I'd love to get your feedback. Also, in later webinars, we're going to be drilling down on option components, when and where I find those options trades appropriate. Also, here's that link again. You're going to have to pause and type that in. I just want to thank you guys all. If you want to reach out to us with any questions, you can reach us at 310-598-6677 or email me at trading@protraderstrategies.com. All right, that's all I got. Good luck with the market profile. If you got any questions, please reach out to me. I'll go into a little bit more detail or get you some information for that. All right, if you can't take that, take it easy.